What's up, YouTube? So if you've been a follower of my channel, then you know that on this channel I'm giving you stocks that I personally am buying into, or at least that are kind of on my radar that I'm intending to buy. We're going to do something a little bit different today. I'm going to be giving you 3 stocks that I think probably could crash in the near future. So these are more stocks that maybe you want to stay away from. So grab your coffee, guys. Let's settle in and let's talk stocks for just a little bit today. We live in a little bit of a weird time when stocks should be dropping, or when a stock should drop, or when a company isn't doing well or the prospects aren't looking too great. There's something that investors do called shorting, and most of you are probably familiar with that, but they're betting on the fact that the company is not going to do well, and when the company does badly, the investor makes money on it. However, now we have something, we have the Wall Street bets phenomenon. So the Reddit feed Wall Street bets and associated retail investors have kind of wrecked the system. And now we've got kind of the opposite effect, where when a company is doing poorly, or when there's not very many prospects for it, and these hedge funds start shorting it, retail investors come out of the woodwork to pump the stock up. And we've seen some stocks pumped up to crazy extreme highs. So always spotting companies that are going to fall, that are going to go down. I feel like that's more difficult than spotting a company that's going to succeed, especially now with the Wall Street bets phenomenon. And I'll probably, guys, on this channel never recommend to you a specific short. On this channel, probably won't do it. But I think that we can learn a lot from analysts who see a downturn for certain stocks. And that's what we're going to be looking at today. We're going to be looking at 3 companies that analysts on Wall Street have predicted will drop by 50%. Now, so the first stock, let's jump right into it. I want to give you these stocks today. First stock, and disclaimer, I don't own or recommend any of these stocks that we're talking about today, okay? These are more stocks I would say probably stay away from, especially for the safe investor. First company is Transocean. So they're a offshore drilling specialist company, and over the last few years, they've seen more downtime than uptrends in their stock prices, in their value as a company. So oil prices are down, and because oil prices have been dropping, the stock is down 90%. Yeah, that's right. They're down 90%, or they were down 90% from the early 2000s. But with rising crude prices, the stock is coming back up. And most analysts think that this stock has come too far too quickly. They're currently trading at a price of $4.50 per stock, and the average price target, watch this. So right now it's trading at $4.50. Average price target for this stock is $2.50, or 44% lower. And just to clear things up for my people that are kind of new to this whole idea, a price target is what analysts say that the company should be worth, or what a stock should be worth. So average price target $2.50. Actual currently trading around $4.50 as the time of this video. 44% lower. And the lowest price target that I'm seeing is just 50 cents for the stock, which is 90% lower. Now, Barclays is a great representation. They're a great company, great representation of Wall Street's opinion. In March, Barclays cut the stock to underweight from equal weight, and they set their price target at $2. And Barclays said that the price was overly optimistic about a comeback in offshore drilling. So that's the first stock, guys, that I would probably say, I would not take a long position on it. I would not invest for the long haul. Just wouldn't do it. I don't own any Transocean, don't plan to buy any. Okay, giveaway. Guys, I'm doing a giveaway on the channel. So if you want to have a chance of getting yourself $50 so that you can buy just some stock, whatever you want, just put it in whatever. If you want a chance at that, all you have to do is make sure you're subscribed to the channel and then like and comment on this video. If you've done that in the past on previous videos, do it again. you enter your name in for a second chance of winning that $50. We're going to give it away, guys, when the channel hits 250 subs. All right, let's look at that next company today, and that is, are you ready for it? American Airlines. American Airlines. So this stock is down significantly, or they were down significantly at the beginning of the pandemic. For obvious reasons, travel was restricted and airlines were shut down across the country and across the world. And so, of course, American Airlines stock, along with so many other stocks, crashed significantly. And we've seen massive losses for the company ever since. However, the hope of recovery over the last month or two have recently driven the prices up. And on this stock, I have to say that analysts are a little bit divided. Jefferies moved their target from underperform to hold, and right now they have a $25 price target. And what they're saying is that this idea was based on a recovery prospects in spite of the high debt. So even though American Airlines has some high debt, they're saying the recovery prospects are good enough to where we're going to put this to a hold. And we're not saying this is the worst thing ever. Just hold on. They're not recommending it. They're not saying buy it, but they're setting price target at 25. Now Susquehanna, not sure if I'm saying that. They set their price target at $10. So quite a bit lower than Jefferies, and they said that domestic airlines would appear to do better at first due to continued lockdowns internationally. So since America is opening up a little bit before most other countries worldwide from this pandemic, that's why it looks like American Airlines might be doing better right now. But look at this, 14% of the stock's float is short positions. 14%. So there's a large amount of investors that are betting against American Airlines right now. And I think one of the main reasons has got to be their huge amount of debt that they've racked up since the pandemic. So I think the only thing that's really holding up American Airlines price right now is retail investors, Robinhood investors that are coming in saying, everyone's betting against them. I'm going to put a little bit of money in them and see what happens. Now, before I give you this last one, I'm going to tell you that you can get some free stocks today. If you do not have a Webull or a Robinhood account, you can sign up today using my links in the description, and you'll get yourself some free stocks. 100% guaranteed, guys. I got my free stocks. In fact, this next stock that I'm going to mention, I actually got for free on Webull when I downloaded the app. But I sold it as soon as it cleared. So here it is, our third stock, guys, that really probably is in danger of seeing a huge fall in the near future, is AMC Entertainment. AMC. Now, of course, if you're familiar at all with what's going on in the news, then you know AMC is a battleground in investing right now. This is crazy. The numbers are crazy, guys. This stock is up 2,500% since the beginning of this year. In 6 months, up 2,500%. And all respected analysts agree on this one, guys. There's no division. All analysts say this stock is going to come back down from the moon. All right, guys, this stock is going to fall. Everybody is saying this. The price target for AMC is anywhere from $16 as a max down to just $1. $16 as a max down to $1. That's going to be fall. If it goes down to that price range, then it's going to be a fall from 70% all the way up to maybe even 98% of AMC's value gone. That means if you have $1 in AMC, all you're going to have left after that is possibly 2 cents. This is going to be a crazy fall off. All analysts are kind of agreeing on this, all respected analysts. The investment community, on the other hand, has pushed back. And they said, we don't care what the analysts say. We don't care what the hedge funds say. We don't care what this company, we don't care. We're buying AMC because we think that we can push it, we can squeeze it, and make some money out of it. And the investment community is what is driving the price of AMC in this at this time. Early this month, AMC took advantage of this and they sold $587 million of their own stock when the price share was around $50. Now, if we look at the amount of people that are shorting this, the short interest is 17% afloat. So there's a huge number of people again that are betting against AMC and are expecting it to fall out very soon. And I would have to say that I'm not shorting them, I'm not touching them. I'm not touching AMC. But I would say if I was going to do one or the other, probably shorting is the one I would do. Now, the business is going to improve. Here's the tricky part. We're coming out of the pandemic. Their business probably is going to improve as theaters are reopening and people are going back to the movies. But the question is, can they hold onto their gains? Can they hold onto those gains? And I just don't see how they can hold on to a 2,500% increase since January 1st. So, will Wall Street be right, guys? Well, they've been notoriously wrong recently, as we've seen with all this crazy like short squeezes and these retail investors, Robinhood investors coming in out of the woodwork, guys, to just like shake up the market. But some investors are taking Wall Street shorts. This is how crazy it is. When Wall Street goes in, these hedge funds short something, people are looking at this as a buy opportunity. That's how insane things are right now. When everyone's saying you should sell, when all the respected analysts are saying this company's going down, there are some investors that are saying this is their signal to buy because the retail investors are about to flood in and make this the stock spike. Now, guys, that's not my type of investing. I'm not that kind of investor. My strategy is to buy good companies and then hold on to them to the moon, guys. That's my strategy. Don't buy into all the hype. Don't buy into what everyone is saying. He's saying, she's saying. Look for good companies and hold on to them until they hit your target, until you get out of them what you wanted out of them. And guys, if you want to know what companies I think those are specifically, I tell you every Tuesday at noon what stock that I'm personally buying. So if you want to see the one I posted yesterday, then you can go look at that. All right, so stock of the week. Remember, every Tuesday at noon. Anyway, guys, I really appreciate y'all. Thanks for staying tuned all the way to the end of the video. Thanks for watching. Y'all have an awesome week, guys. Good luck on your investing. Y'all let me know your opinions in the comments. I want to converse with y'all. I want to see what y'all think about all this. But anyway, remember, dream big, and I'll see you in the next video. Thank you.